Welcome grade 12s. Yes, you are with Ashraf Patel and we are doing your favorite subject, accounting. What topic are we covering today? Today we're looking at cash flow statements. Immediately, your eyes are supposed to light up because that's the section that you're going to ace in the exams, isn't it? That's right. After having spent some time with us, you're going to be a boffin with the cash flow statements and you're going to look forward to that section in the exams. So, the place to be with us right now, your mind, your body and your soul focused, and here goes. Let's look at the question. What is the question? The question says, you are provided with information relating to Zippo Limited, a public company, and the financial year end is the 28th of February 2011. You are then given information regarding the ordinary shares, the details of the authorized. Now remember this, authorized. What do we know about authorized? That's the maximum number of shares that a company is allowed to sell. It cannot exceed that. Right. Then, details of the shares that have been issued. What are they? We had 411,000 shares on the 1st of March. We sold a further 189,000. In total, the number of shares that we have sold is 600,000. All of this important information which we will use as we go into the question. We also given the market price of the shares, which was 6 Rand 70. Okay, now remember, a share has 3 prices. What are the 3 prices that a share has? 1, the par value, that's the 3 Rand. Number 2, it has a market value, which is 670 cents. And yes, it also has a net asset value per share. Keep that in mind. Regarding my dividends, what was the story? There, an interim dividend was declared, right? And paid. We also know that the directors recommended a final dividend of 32 cents per share. We'll come back to that. What else do we know? Regarding my fixed assets, I know that land and buildings were sold for 1,250,000. Equipment was purchased for cash. No other tangible assets were bought or sold. Regarding my financial indicators, these are my financial indicators that are given to me. So clearly you can see that that is the information that I'm going to require when it comes to answering my questions. Okay, now let us get right into the actual question and see exactly what is it that is asked of us. Here goes. Starting with number 1.1. The question says, indicate where each of the following items would be placed in the balance sheet by choosing the answer from the list below. Write only the answer next to the question number below. Right, first one. The current portion of a loan. The current portion of a loan. In other words, you are aware that when you are dealing with a loan, you will always separate a loan into the 2 components. What are the 2 components? The non-current and the current. Obviously, the non-current is going to feature where? That's correct. The current portion of your loan appears under current liabilities. Your answer here is current liabilities. So therefore, just by way of an example, or to further illustrate the point, if the current portion is appearing under current liabilities, the long-term portion would therefore appear under non-current liabilities. Always remember to separate your loan into the 2 components. Let's look at the next one. A fixed deposit maturing in 2 years' time. Now, The same story with your fixed deposit. Again, the placement in the balance sheet is of utmost importance. What do they want to know? Where will a fixed deposit that is maturing in 2 years' time appear? Look at my possibilities. Is it a current asset? Is it a non-current asset? Obviously, number one, decide what is a fixed deposit. Yes, a fixed deposit is an asset. Definitely, possession of a business. What we have to ascertain is what type of fixed deposit is this? Maturing in 2 years' time. Therefore, would it be a current asset or a non-current asset? And definitely, your answer is, let's look at the answer. It will definitely be a non-current asset. That's right. Why? Because it has a maturation period of greater than 1 year. Therefore, a non-current asset. Let's look at the next one. Trade and other receivables. Come on, I'm sure this one you all can answer. You must be shouting out the answer even before I answer it. What is my trade and other receivables? Definitely, I would find it under my current assets. That's right. Okay, so I've got that one. And now I come to the last one, namely my bank overdraft. Remember, a bank overdraft, where will it appear? Understand, an overdraft, number one, is a liability. So, if it is a liability, is it a non-current liability? No, it is a current liability. There it is. Current liability. Okay, so we're done with the first part of the question, which was pretty straightforward. Something to boost you, to make sure that you are ready for the next section. Let's look at the next one. You are provided with information. We've dealt with that. Prepare the retained income note to the balance sheet on the 28th of February. So there's the emphasis. Just by way of an advice, remember, whenever you have reading time prior to the commencement of your exam paper, my appeal to you is open your answer book. And clearly in your answer book you can see, okay, so this is what is expected of me. And in that way, during the reading time, you get a clear picture of exactly how you need to go about answering your exam paper. Just another tip. Don't start with question 1 first. Who says question 1 must be answered first? No, you will always commence with the question that you like best first. So if cash flow is your favorite, by all means, start with the cash flow statement. Got it? Brilliant. Let's move on. Okay, now the retained income. What's the first part that I need to do in my retained income? Remember, I must commence with my net profit. And important now, my net profit after tax. Remember that. Very, very important. It's my net profit after tax. Okay, now, where am I going to get this information? Let's go and find the information. So here goes. This is the information that we require. Now remember, what is it that we wanted? We wanted the net profit after. We wanted the net profit after tax. Guys, watch. So therefore, looking at my information, what do I have? There's my information. Obviously, you can see here that that's my net profit before tax. There's my income tax. And my net profit after tax is given to me as 714,245. So what do? I immediately take that information, 714,245. Right? There's it. 714,245. And I slot it in. I now have my net profit after tax. Once I have that figure, I now go and look at my dividends. Right? So immediately having got that, I say, fine, what are my dividends? Now this obviously means that you need to know this note. Remember, the detail is not given to you, so you need to know how to complete this note. And when I'm dealing with my dividends, there are two dividends that I need to take cognizance of. What are the two dividends? One will be my interim dividend that has been paid. And number two, I will also need my final dividend that has been recommended. So in other words, your dividends, your total dividends are made up of two components. What are they? It's your interim dividend that has been paid, and number two, your final dividend that has been declared. Got that? Okay. Now, information. Let's check. What do we know about our dividends? Remember, we spoke about it earlier on. I said we'll come back to it. Here goes. There's my dividend story. What had happened? An interim dividend of 66 cents per share was paid on the 30th of September 2010. Immediately, the first question that I asked myself, what was the number of issued shares? That was 600,000. Okay? Multiply that by 0.66, and that is equal to 396,000. Aha! So, this dividend here is 396,000. Which one? The interim dividend that has been paid. Now, I go back and say, fine, I also need my final dividend that has been recommended. What was that one? The directors recommended a dividend, let's find that one, a final dividend of 32 cents per share. That's right. Here it is on the 28th of February. Immediately, same story. What do? Let's work out that dividend first. We start off with the 600,000. Multiply that by 0.32. Remembering that 32 cents on your calculator is 0.32. 100 cents, 1,00. This is 32 cents. And this is equal to 192,000. So therefore, my final dividend will be 192,000. Right. What do I now do? Immediately I say, fine, I've got the 192,000. To it I add 396,000. I'm adding my two dividends together to give me a figure of 588,000. 588,000. Okay. Clear, guys? Right. So I've got my net profit after tax. From it, I've subtracted my dividends, which is 588,000, and this will now give me my retained income at the end of the year. Okay. Now, what we're now going to do is we're going to work out that retained income at the end of the year. And this is what we do. Watch. You've got pre-printed in your answer book a figure of 423,000. That's right. So you would commence with that figure, 423,000. Add to it 714,245. Okay? Remember, you're doing a calculation, and your dividend, this one here, the total dividend is actually in a bracket to indicate that you are subtracting. That's right. So minus 588,000, and that gives you your final answer, 549,245. 549,245. That's it, guys. That's the complete retained income note. Quick recap. It's your retained income at the beginning of the year, your net profit after tax, subtract your dividends. Which one? Your total dividends. In other words, your interim plus your final. And that gives you your retained income at the end of the year. Right, let's move right on into the question. We now have to calculate. It says, complete the note. Which one? The reconciliation between net profit before tax and cash generated from operations. How do we start off with this note? Watch, it's given to us in our answer book. We have our net profit before tax, which is given to us. Now, immediately I know that there are two things that I need to add back to that amount. What are they? Number one is my depreciation. Why? Why am I adding back depreciation? Come on, you should be shouting out this answer. Because depreciation is a non-cash item. That's right, it's a non-cash item. Depreciation does not impact on money leaving the business. As a result, I have to add it back. Remember, I'm busy with a cash flow statement. The cash flow statement deals with cash, and therefore I add back my depreciation. Now, where do you think I'm going to find my depreciation? Let's look at my information. In my information, I have here, there goes, depreciation given to me. What was my depreciation? 203,000. Immediately I say fine, add back my depreciation, and the amount was 203,000. Okay, that's my depreciation. So add back depreciation. Why? A non-cash item. Step number two, what do I add back? Come on, I add back my interest expense. Interest expense. Yes. Now, you may be now asking, why do I do that? Why must I add back interest expense? Isn't that money leaving the business? Yes, it is. But your interest expense is not an operating expense. Please bear that in mind. It is a financing expense. And as a result, I'm adding it back here to subtract it somewhere else. So, information, do I have my interest expense? There's my interest on loan. Can you see? Given to me. Interest on loan. There it is. What's the amount? 86,400. Immediately I say fine. 86,400. 86,400. And I now have, what can I now do? I can now do a calculation starting off with 1020,350 plus 203,000 plus 86,400, and that will give me a figure of 130,950. Now obviously that would be my operating profit before changes in working capital. Figure 1309 750. What is that? My operating profit before changes in working capital. Okay guys, what we're going to do is we're going to take an ad break, freshen up, and when we get back, we will continue with this question. Right, I'm sure you took a quick break, you are focused, and you are ready to move on with the cash flow statement. Right, now, what are we going to do now? We're now going to look at the changes in working capital. And when looking at the changes in working capital, there are three items that we look at. Number one, we look at changes in inventory, but good for us, it's a given in this case here. We don't have to concern ourselves with it. So the second item that we will look at is trade and other receivables. Now, you're finding me writing something here that doesn't look too kosher. Yes, that's right. I have a license to abbreviate. You do not have that license, and therefore you will write this out in full in the exams. Obviously, because of time constraints, I'm explaining to you, and therefore you'll notice that sometimes you will find some abbreviations, but this does not mean that you are allowed to abbreviate. Guys, no abbreviations, full stop. Ashraf has a license, you don't. Okay, so when you're sitting here, one day, by all means, abbreviate. Until that time, write it out in full. Got it? Brilliant. Okay, now, trade and other receivables. Now, what do I do now? Looking at my information, I now have to identify my trade and other receivables. And immediately I go to my information and I say, fine, here's my trade and other receivables. Okay? And yes, I can immediately see that I have a total for it as well. That one there. And that one there. So the totals are given to me for my trade debtors as a component of my trade and other receivables. Can you see? There's the total. So the secret is, do not work with the total. Why? And this is now the important consideration. Included in trade and other receivables, you will notice, is an item called SARS income tax. Now remember, you exclude your SARS income tax when you are doing this particular calculation. And what's the reason for the exclusion? One only, because SARS income tax has its own note. Please guys, very important, note this. Whenever you are doing your comparison for trade and other receivables, exclude SARS income tax if it has a debit balance, and there you can see it has a balance, that one there, okay? But we will come back to that one. So exclude it when you are doing this comparison. So the only thing in this case here that you will compare is these two figures here, the 1,640,000 and the 1,150,000. But now, something that you must do when you're working with a cash flow question. Immediately on receipt of your question paper, alongside the information, the moment you are given two tables with dates, watch this, 2010, 2011. Immediately you draw an arrow. Watch the direction of an arrow. And this is what Ashraf refers to as the love arrow. Okay? If a love arrow is misdirected, it creates havoc in your lives. If the love arrow in accounting is in the wrong direction, it's going to create a havoc in your cash flow statement. And you don't want that, do you? So therefore, make sure you know the direction that you are comparing. In other words, that is the beginning of the year, and that is my end of the year. Clearly you can see it, can't you? Right, and now, I have 1,150,000 at the beginning of the year, 1,640,000 at the end of the year. Immediately I pick up my calculator and I say, fine, 1,640,000 minus 1,150,000, 1,150,000, is that right? 1,150,000, think so? Giving me a figure of 490,000. Now, you ask yourself the question. What question do you ask yourself? What happened to trade and other receivables? Let's look at it again. It was 1,150,000, is now 1,640,000. Obviously, it increased. And now, I'm going to teach you some French. Watch this. French in accounting. Has Ashraf lost it or what? Let's see. A-I-U-L-I-G and A-D-G-L-D-U. What's this? How do you pronounce that one? Ayulich? However you pronounce it. I don't have a problem with it. And the second one, Edgledu. Again, pronunciation is not important. What is important is the understanding of this here. Let's go through it. When an asset increases in value, then you have utilized cash. And that's the important one. When you are utilizing cash, watch. Again, coming back to my information. What was my asset at the beginning of the year? 1,150,000, correct? It increased. Therefore, when an asset increases in value, I have utilized cash. How much cash did I utilize? There's my answer. 490,000. So, 490,000 is the amount of cash that has been utilized. Now, guys, look at the U. The U tells you that the figure must be in brackets to show an outflow of cash. Yes, we spent money to increase our trade and other receivables. Okay? And as a result of that, we have an outflow of cash of 490,000. So remember, the U tells you there must be a bracket around that figure. And the same would apply to this one here. Let's look at the next one. The next item we look at is our trade and other payables. Once again, when you're looking at trade and other payables, do not compare the totals. Why? Included within the total is what? There's trade creditors, there's accrued expenses, there's SARS income tax, there's shareholders for dividends. Can you see that? So in other words, itemize them. Don't look at the total. Why? Because this one here, SARS income tax and shareholders for dividends, right, is not part of this comparison. Reason, it has a note of itself. You will see just now when I refer to that. So therefore, when I'm looking at trade and other payables, what am I going to look at? I'm going to look at trade creditors, yes. Am I going to look at accrued expenses? Yes. So those are the only two items that I'm going to make a comparison of. In other words, compare that to that. Notice what I'm doing? I'm excluding SARS income tax. I'm excluding my shareholders for dividends. Why? They have a note for themselves. There's a specific note for SARS and for shareholders for dividends. Got that? Okay, let's do the comparison. Immediately I say, fine, let's do the comparison. It's 1,030,123 plus 8,700 is equal to that, right? Now watch. Minus from it 1,534,355 minus 8,000, and your answer is 503,655. 503. Let me just write it down here. 503,655. Now, obviously, you can see what has happened. Looking at this once again, your trade creditors and your accrued expenses would definitely form part of this comparison. What happened to it? If you make your comparison, it increased. Remember that? It increased. Now, ask yourself the question. We are dealing with a liability, aren't we? we are dealing with the liability. And what is happening to the liability? The liability is increasing in value. And when a liability increases, we are generating. That's right, we are generating. And therefore, when I do my trade and other payables, okay, the amount was, what was the amount? 503,655. 503,655, right? So have I taken it into consideration? Does it need a bracket? Does it need a bracket? Does the G give you any formation of a bracket? Certainly not. So what do I have to remember? It's only when it's utilized that there will be a bracket around the figure. Why? Because there's an outflow of cash. In this case here, the 503,655 is cash being generated. In other words, my bank account will increase. There's an inflow of cash. Keep that at the back of your minds. Make sure that you know these two acronyms. What are they once again? AIU, LIG, and ADG, LDU. Ayulich and Edgledu. So yes, Ashraf has taught you French. Let's continue. Let's do our calculation now. So here's my calculation, starting off with the 27,000 minus 490,000. Why? Because it's in a bracket, plus 503,655, and my answer is 4655. Let's put it in 4655. 4655. Remember that this here is as a result of what happened in my block. Got that? The 27 minus 490, because it's a negative. Remember guys, the bracket is important. You need to give the marker a clear indication that I know what I'm talking about. This was an outflow of funds, therefore in brackets. A positive is a generated figure. And the net effect of these three components, 1, 2, and 3, is a 4655. Let us now add plus 1309750 to give me a total of 1350405. Okay guys, we're now going to move on to the cash flow statement proper. But before we do that, let's not stray or go away, because we're going to an ad break. We want you to refresh and come back ready for the cash flow statement. See you in a while. Welcome back guys. Right, we finished the note. We're now moving on to the face of the cash flow statement. Remember, we now have to write the correct amount, starting off with the cash generated from operations. Now obviously you've worked this one out, haven't you? Remember what it was? Let's write it in. Here goes. 1350 405. Let's just check if that's the correct answer that we have there. There goes. It's a 1350405. Okie dokie. Now, moving on. Remember now, the interest paid, we said we subtracted it earlier on. Remember that? It's now in the first note, when we did the reconciliation, we added back the interest, and now we are subtracting it. Reason? It is not an operating expense, it's a financing expense. The next thing that we have to work out is our dividends that have been paid. Right? And we have to work out our taxation that has been paid. Now, in order to do this here, what I'm going to do for you is I'm going to show you a method. And I want you to use this method in the exams. Let's start off with our taxation paid. There are different methods you can use, obviously. This is just one method. And I find it the easiest because you know how a ledger account operates. You've done it before. Which account are you going to open? Your SARS income tax. Step number 1. Find your opening balance. Remember we said we excluded it? And now you can see why. SARS income tax at the beginning of the year had a debit balance. Watch, it's under my trade and other debtors. Can you see it's under receivables? There it is, 48,500. Therefore, we say year 48,500 debit balance. So, I've got my opening balance. Step number 2, proceed here. Step number 2, the closing balance. What's my closing balance? Once again, watch, SARS income tax, but at the end of the year, it's under payables. That's right. At the end of the year, it's under my payables. How much? 69,000. Therefore, at the end of the year, closing balance, the amount is 69,000. Okay. There goes. So what have I done? I've slotted in my opening balance. I've slotted in my closing balance. Step number 3. What do I need? What was my expense in respect of taxation for the year? Let's find it. Income tax for the year amounted to 306,105. Therefore, 306,105. Let's just see if we got the correct figure. 306,105. Done. So guys, procedure, opening balance. In this case, debit. There goes. Got it. Closing balance, a credit balance. There it is. Expense for the year, 306,105. Calculator. I just move our calculator here. There's it. Now, calculation. 306,105 minus 48,500 minus 69,000 is equal to 188,605. Okay, so obviously 188,605, that there represents my bank amount. In other words, my taxation paid is 188,605. 188,605. There's my taxation paid. You could obviously, and you should, show that calculation in brackets. What's the calculation once again? 316,105 minus that two figures. So it's 306,105 minus 48,500 minus 69,000 to give me the 188,605. There I've got the figure. Okay, so here I'm just going to say bracket, and I'm going to say here calculation. Please show the calculation. Why? So that you can get your part marks. The next thing that I need to work out is my dividends paid. Same story. Watch what we're going to do. Open up your ordinary share dividends account and your shareholders for dividends account. Information. What do I know? I know that my shareholders for dividends, there it is. At the beginning of the year, I had an amount of 57,700. Okay, so shareholders for dividends, beginning of the year, 57,700. Now immediately you realize the following, that the moment your shareholders for dividends, if you have an opening balance, that amount is paid during the year. So 57,700, immediately that's my one bank figure, 57,700. What is that? Last year's final dividend that had been recommended is now paid. There's my one bank figure. I now want my second bank figure, and I'm not going to go very far to look for it. Why? Because remember here, I had worked out something, didn't I? Do you recall? In my interim dividend, here it is, just to draw your attention to it, the interim dividend that you had paid, how much? 396,000. Therefore, plus 396,000, that was your interim dividend that you had paid. So guys, what is it that I need in my dividend paid? I need two figures that I'm looking for. Last year's final dividend, which was paid this year, it's a 57,700, plus this year's interim dividend that has been paid. Remember, the emphasis is on the bank figure. Therefore, I now add 396,000 plus 57,700, and my answer is 453,700. $453,700. Again, the figure in brackets. Now I do my calculation. What is my calculation? Starting with my calculation, I've got 1,350,405 minus 86,400 minus 453,700 minus 188,605, and this is equal to 621,700. 621,700. That's my effects of my operating activities. Let's move on. Now I come to my investing activities. And what am I going to look at? Two things. The purchase of the fixed asset, and not forgetting, certainly not forgetting, the sale of my fixed asset. Again, I need my information. Therefore, in my information, what do I find? What am I told? I'm told fixed assets. Remember I said land and buildings was sold for 1,250,000. Immediately I say 1,250,000. That is my sale of my fixed asset. Done and dusted. What do I need to do? The purchase of my fixed asset. And watch what I'm going to do here for you guys now. There's my asset account. Starting with my information, what do I have? Regarding the fixed assets, equipment was purchased for the year. In other words, yes, I did purchase equipment, but no other tangible assets were bought or sold. So immediately, this is what I do. There's my fixed and tangible assets. Starting with the opening balance, 3,824,500. $3,824,500. Opening balance, got it. Closing balance, that one is dealt with. 2,790,000. 2,790,000. Once again, grade 12s, look at the procedure. Very often, it's the procedure that leads you to the answer. Number 1, opening balance. Got it. Number 2, closing balance. Got it. Number 3, what do I now need? I now need to put in the sale. Remember, what was my sale? My sale was 1,250,000. Okay? And I need to put in my depreciation. Now, you will recall we had depreciation. Can you recall that one? Let's find our depreciation. What was my depreciation figure? My depreciation figure was 203,000. Okay? So therefore, I put in my figure here for depreciation. Remember, I'm working here 203,000, and immediately I now do my calculation. What is my calculation? Starting off with 2,790,000 plus 203,000 plus 1,250,000. Have I got it? 1,250,000 minus 3,824,500, and this is equal to, that's right, 418,500. 418,500. Remember, in a bracket to indicate that I am spending money. Again, very important. Show the calculation here, please. I'm appealing to you. I'm begging you. Show all calculations. Okay, right. So the net figure that I need now is, let's do that, 1,250,000 minus 418,500, and my answer is 831,500. Let's put it in. 831,500. Okay, now, do I have my 3 components? Let's check. Do I have my operating? I have. Do I have my investing? I have. Do I have my financing? I have. What can I now do? Let's do that. Let's take those 3 components together. It's the 831,500. That's that one there, right? Plus, let's just redo the calculation. Let's start at the top. It will make our task much easier. Let's get our calculator. Starting off with the figure, 621,700, 621,700, plus 831,500, 831,500, plus 613,900, and my answer is 2,067,100. Right, 2,067,100. Let's put it in here. 2,067,100. Okay, so that was my financing, my investing, and my operating. So I've got the 3 activities together. The total of that is that. Now, I need to find out what was my cash and cash equivalents at the beginning of the year. Look at my information. In my information, I'm told that I have a bank overdraft of 915,100. 915,100. So immediately I say, fine, let's put it in here. 915,100. But there was something else. What was there? Look at cash and cash equivalents. We had a figure at the beginning of the year of a plus 3,000 that appeared under my cash and cash equivalents. So cash and cash equivalents, remember, if there's an overdraft, look above and see, is there a cash and cash equivalents? Yes, there is. How much was it? 3,000. So what do we do here? We say minus the 3,000, and that will give me a figure of 912,100 negative. Okay, so now we got the 206,700 minus 912,100, and my answer is voila. Watch, guys. 11, 55, 000. Watch my calculator. 11, 55, 000. What have I done? My cash flow has balanced. One of the greatest feelings is when your cash flow works out in the exams. Well, guys, we've worked really hard with the cash flow statement. We've explained to you, we've given you guidelines, we've given you methods, we've given you acronyms to learn, we've taught you some French, and we've done a lot. Please make sure that you master the technique. From me, Ashraf Patel, the normal story, aim for the moon. If you don't get there, definitely you will be a shining star. An accounting shining star. Until the next time, be good. Bye-bye.